All right, let's get going. This is Dr. Jeffrey Scott. This is my Market MRI Pro update for October 9th, 2025. I title this one, Markets Fail to Hold What Was a Very Early Gain. And then, did I see a Hindenburg Omen signal tonight? Again, October 9th, my email address is marketmripro@gmail.com. Google group is called Top Down Trader, and www.marketmripro.com is my fledgling but up and running website. This video is for educational purposes only. Anything we talk about should be construed and taken in the spirit of education and not investment advice. I do these videos without hours of preparation. This is the first time I'm looking at the market after it closed, and I'm doing it so I talk you through my workflow and see how I use my tools. Trading involves risk. You are solely responsible for any decisions you make. I can own, buy, or sell any instrument that we talk about tonight. Trading stocks and options should be considered risky. You should always consult with your financial advisor before making trades. And I've got tools in multiple platforms, but we're going to be using the Market MRI Pro app tonight. Google Groups called Top Down Trader. You get discounts on my stuff. You'll get invited to members-only webinars and teaching events. And it's how I reach out to you every night and say, hey, I just posted the video. It's free. Go to Google Groups, go to all groups, look for Top Down Trader, let us know how you want to be contacted. Palm Beach Gardens live meeting. Had a couple more people come in today. One online, one in the room. So there's still a couple of spots left. So if you're on the fence, you need to make a decision, at least if you want to be in the room. I guess on an online, you could tell me the night before if I pay attention to my email, which you know that I will. But it's October 26th and 27th, a Sunday and a Monday in Palm Beach Gardens, Florida, where it was in the 80s today, but a little rainy. It's at the Marriott Palm Beach Gardens, 2 days packed with education, software instruction. It's $12.50. Forget eating. I'll feed you breakfast, lunch, and dinner, snacks on Sunday, cruise on my boat Sunday night, weather permitting, and then breakfast and lunch on Monday, and we'll decide after we complete the program whether it makes sense to do dinner or not. John Person has his meeting the same weekend. His is Friday and Saturday. That's why mine is Sunday and Monday. We both get a live day in the markets. John is awesome. I'm going to go on Saturday to the second half of his program. I would go on Friday too, but I'm presenting in healthcare at a conference in New York. Also, if you come to the meeting, pay your $12.50, you'll immediately trigger a $400 rebate credit with me. What does that mean? It means that if you don't have my tools, you can get $400 off those tools. If you've already got the tools, then you can wait until next year and use it to pay for the meeting next year. It won't expire. I may expire someday, but it won't expire as long as I'm still around and doing things. So if you want more information about the agenda, just reach out to me, Jeffrey Scott at marketmripro@gmail.com. Know your news and earnings. So more Fed heads today. I think that whipsaws the market a little bit. The minutes came out yesterday, and we know there was a one vote um, higher to two cuts versus one cut. So it's mixed attitude. All kinds of concerns by Fed heads and others about economy, what's going on with employment, the lack of data. We get to consumer sentiment tomorrow. That could be a doozy. We'll see what it says. And, if it surprises to the downside, not so good for the stock market. Delta came out. I don't see how they finished, but their earnings were perceived positive. I think they're going after, this was a relief rally, at least when it opened today after the prior quarter. We got real earnings starting in the next week. It's a judgment call to hold stocks over earnings dates. It is bad judgment to not know when your stock's earnings date is scheduled. For more information about anything I talk about today, software, how I trade, what I trade, my meeting, just email me at marketmripro@gmail.com. And if you own the program, you've had any issues whatsoever getting it started, etc., Praveen at coding@marketmripro.com is your contact. Now, what else we got for you? The market today, well, let's just look at this first. We do intraday charts. Now, I don't trade intraday, and I don't trade on a 5-minute chart. However, I thought it was interesting to show what happened um, in the markets today. So let's find 930. I bet it's right around here. So the markets opened here, and they actually rallied at the open. I watched my portfolio turn positive at the open, and then before I could even go back and look, it turned around and it went negative. And the market, shortly after opening, the peak here is about, this is where the open, pull back, little rally, but it sold off almost immediately. And really didn't bottom until 1044. But was that the bottom? No. It stabilized a little bit. This was a day trader's dream. You had a trend, another big trend, ending with probably the low of the day around 130. Couple of retests here at 209, almost 3 o'clock. Then we had a rally and then eased into the close. So for the most part, this market was down today. And, if you want to be encouraged, you could be encouraged by the fact that the market had such a nice rally in the afternoon, but it still finished much lower than it opened, even on the Qs, which got back as close as anything. So I think that's going to be one thing that we're going to have to be watching. And what do we do with what we saw today? If we look at the daily briefing, we could see that dollar was up 6.68%, closing near the high of the session. The volatility was up a bit in the bottom part of the session. And then if you look at the US index ETFs, the Qs were down 0.12, Spider down 0.29, Diamonds down 0.55, and the Russell down 0.64, all of them off their highs of the day, as we saw in the chart. And Bitcoin, which had a nice rally, it was down 1.88. Now, for the last 5 days, interestingly, Bitcoin is negative. It was really positive a week ago. If we look at the new highs minus new lows at 52 weeks on the NYSE, new highs still look okay. The new lows have increased, and you could see still positive 48 and 68 over there. Probably the most ominous things is look at how many sectors went from positive to negative in each of these indexes, how many industry groups went from positive to negative, and participation, only 20% of the S&P 1500 were up, 37% of the NASDAQ, and 23% in the NYSE. Yeah, that's pretty bad news. I mean, very poor market breadth is never a sign of a great market. If we look at the S&P 500 sectors, the only thing that was up, kind of sort of, was staples, and they were only up 0.01. Leading to the downsides, industrials, materials, energy, communications, discretionary. The ones down 1% were the first three: industrials, materials, and energy. So, not a good day in the US stock market. It was not enough to flip the timing market. But that's a big word. It did flip the bongos on the daily Russell and the daily diamonds, the weekly bongo. All we got to do is cross below the WMA and it'll trip to a sell tomorrow. And I think that is within range for both the Russell and the diamonds. So right now, daily still show being a buy, but boy, kind of makes me nervous. If we look at the weeklies, it may take a second to flip. As we look at the weekly, you could see that we're still in a buy on all four. The bongos are still blue. So, the longer term trend is still positive. A doji right off of new highs on the weekly spider, but it's not over until the end of the week. A little bit of a nice tail on the bottom here on the Qs, closing just off all-time highs on the week. The Russell did not quite make an all-time high and turned down, and same thing as the diamond. So right now, the Qs and the spiders are leading. Um, I'll give you more comments on my thoughts about the market in just a few minutes. If we look at the US index ETFs, let's open them up and take a look-see. What do we see here? We see the spider is in a nice uptrend, and I keep thinking we're going to pull back to the 17. and maybe we will. We were down a little bit in the market, 0.29, but didn't come below the close on the prior bar. Seasonality is positive. Really, no change. If we look at the Qs, closing right off the highs, a red candle, so it closed down a bit, 0.12, positive seasonality. Again, same thing. The 17 or the 50 seem like logical places for a retest. If we look at the diamonds actually tested at the 17. And in fact, not only did they test there, they actually bounced at the 17. So if that 17 holds and the diamonds go higher on Friday, that's an interesting sign. Um, if the 17 doesn't hold, if we closed here at what? Closing price was 463.50 and the 50 is at 455. It's 8 points away. The 50 is less than 2 points. Is that even a meaningful move? No. So maybe we go down and we visit. Hard to believe that that's true. Let me look at that again. 463, Lowe's is 463 and 455 is the 50. Less than 2% move. That would not mean anything. If the market pulls down there and bounces or trades sideways, pause to refresh is always a good thing. So that's still my downside scenario here is the 50. I don't expect a major sell-off, but I got to be prepared for anything. Diamonds look very different, don't they? They've actually broken down, but but again, they're sitting right here. Diamonds being different, down 1.27, but pulling right into their 17-day moving average. So we had looked at that before. And then I talked too much. I forget what I saw the last time. Then the Russell, similar to the diamonds, maybe it's given us a flag here. You expect that to pull into the 17 as well. If we look at volatility, volatility has a thing I don't like. And the volatility has a bottoming sign here. And not only that, it's one thing when it's sitting down here at 14 and a half, but it's now living here at 16 and a half. And does that mean we've got increased risk? And I think it may. I wouldn't be surprised if that's what it means. So that's something that I have to be aware of. And then we have the 10-year, the dollar here. And again, it looks here like the dollar is breaking an all-time high, but my gosh, the dollar sucks. I mean, it did break above the 200, and maybe that's going to make my trip to Germany a lot less expensive. Maybe we run up. Would not be good for U.S. equities to get up here. But notice how far the dollar is. So, that's kind of promising if you're a strong dollar fan. I'm a little bit nervous because strong dollar is not going to help my equity positions. Commodities, strong dollar, sell off in equities. What about commodities? Gold, major breakdown, major reversal. Gold was down 1.85%. Um, how far does it go? Does it go down to 352 where that 17-day is? Again, would that be the end of the world? No. Gold is being propelled by strong economy and rates that are coming down. Um, Ingredients with a little bit of inflation for a strong gold market. But you're going to see corrections, especially after this steep move that gold has had. What about silver? Silver is a little different because the industrial uses, like gold, it traded down hard, but it reversed half of its move. So I think silver looks a little bit stronger here, both of which were strong over the weekend. Oil's doing nothing, going sideways on the 200. We're pulling back into the 50 on gas. And then when you look at the 10-year and the 30-year, they're kind of consolidating in the low fours. And on the 15-year, 4.73 or so on the actually the first one's a 10-year, 15 years on or 30 years on the bottom, not 15, my bad. So we're watching those as long as we stay below these fives, I'm happy. Sometimes I think what the market doesn't like is both getting too high, but big changes and getting there fast is something that I don't think that the markets really like to see. So, um, I think it's promising where they're at, and we'll watch and see where they go. If we look at the buckets, well, we certainly have a mixed picture here. The NASDAQ has just as many stocks above the bands as below the bands. What's the strongest index right here? It's the NASDAQ. And, you know, semiconductors and AI live in the NASDAQ, and that's keeping that up. Contrast that with the other three, where the number of stocks in the upper part of the Bollinger Bands or above the bands are shrinking, and those underneath are building. And the NASDAQ's not without its fleas because it's actually building here as well. You got 16% of stocks below their bands in the Russell 2000. You've got 19% below their bands in the S&P 1500. Those are, hey, I'm getting close to reversal signals. A couple more days like we had today with poor breadth, and I'll be talking about a reversal. Again, I'm in the camp of a 2, 3, 4, 5% pullback from the highs, and then a rally into higher highs at year end. Markets don't know who I am. They don't care who I am. Market breadth. Now, this gets a little bit confusing. You'll notice that on this report, I do not have a volume on the NYSE. It is possible that the Hindenburg Omen will paint later on today on a subsequent data load. And that's happened before. But what I did want to show you is we started talking about the Hindenburg Omens with Ian Woodward over 20 years ago. And this is just a picture of the NYSE, great uptrend, still holding above its 17-day moving average or at it. Had a mobile breakout and a squeeze the day before. And the last Hindenburg that we picked up here would have been around August 11th. In HGSI, which is where it's all started, where the Hindenburg was reborn, they had one on Tuesday and they had another one today. So technically, according to HGSI, it is a confirmed Hindenburg omen. I have in the indicator set inside of TradingView, it did not pick up a Hindenburg omen today, so that refutes it. I have some issues with my Edge Rater. It's only giving me yesterday's data. Sagar's Q market breadth tool picked up a Hindenburg omen today in the NYSE. So I think we have to put down a check mark in bearish signals because we know what happens after Hindenburg omens. Most of the time, nothing significant. 3 out of 4 will be a modest pullback. However, 1 out of 4 is a significant pullback, and there has not been a major market correction that was not preceded by Hindenburg omen since and including the Great Depression 100 years ago. So I pay attention. In fact, I've got multiple videos called Heed the Hindy. Now, we are clearly, in my mind, in some type of a process here. Will this be a short-term top, modest pullback, and a move to higher highs? Or is this going to be a more meaningful pullback? I don't know. But that Hindenburg, especially confirmed here, tells me maybe be careful. Now, I did buy puts on my Baidu position. It's had a huge run, and I actually, I don't want to get rid of it, but if I don't want to hold it through a breakdown. So I bought puts pretty much at the money because I think it's going down at about 140. And I sold calls at the same price. So what am I basically doing? I'm guaranteeing I can sell it at the current price. Stock goes up, I'm going to have to sell it at 140. Stock goes down to 125, those puts become $15. I buffeted the drop, and I can hold on to it, or I can let it be, or I can put it away. I like having that option. I felt that the market was heavy. I felt that Baidu was heavy, and it actually pulled back today. And partly why I didn't have a bad day was because those puts. I have a lot of different things going on because of my concern about the potentially topping market. They will include short triple Qs. I'm short, excuse me, TNA, which is 3x the Russell, and I'm short the diamonds. All of them were up today. And, I'm just trying to mitigate the amount of heat that I'm going to feel and protect myself in a 5 to 10% pullback. Anything more than that, I'll be out of the market. So, adds to my concerns. Just leave it at that. So we don't see one here, but you can see a pretty significant down day on the NYSE. The NASDAQ really didn't do anything. It finished just below its prior all-time high day. When I look at volume, NASDAQ volume was down 1.94%, and the New York Stock Exchange volume was up 0.04. So I would say average volume. If I look at the other breadth tool, well, actually, talk about it down here. Notice the decrease in the stocks above the various moving averages. Again, sign of decreasing breadth. The new high, new lows still remarkably positive. Remember, we're just off all-time highs. AD line negative and up-down volume negative. And as of this moment, which is about 9:30, there's no change in the signals on the bottom. We'll see if we get that Hindenburg overnight on the refresh data. Over here, spiders, NASDAQ Composite, Russell 2000, S&P 1500. Everything is at all-time high area or within 1 or 2%, even the Russell. Notice how everything else is falling down. And it's interesting because if you look at this date right here, actually, that's not the one I wanted to show you. What I want to show you is, yeah, this is what I wanted to show you. This is what a bottom looked like in August. See if we can get back to April 9th. April 7th is the day I made my call right here. 5th, 6th, 7th. Had to be in here somewhere. Look at how low, or that's the date, but look at how low the stocks above the new highs are. The AD line, the RSI. This was such an obvious time to call a reversal. Do we look like that now? RSI is still high. Stocks above the moving averages really hasn't rolled over. And if you look at the 13-week new high, new lows, which really bottomed here, they've barely come down. They're at 50%. So I don't think so. I think we got plenty of room to fall. The issue is, do we get it now or do we get it in the first quarter with a recession? And no, I'm not calling for a recession, but I think there's enough reasons to be concerned, especially if the shutdown goes on much longer. So I see no actionable thing here. And just look at that 13-week new high, new low, 50, 62, 50, and 40. When this gets to 0.05 or 0.95, it's signaling an imminent reversal. So I'm waiting to see the Hindenburg. Clearly, breadth is horrible, and I think the markets are reflecting that. So what do I think about the markets? It's increasingly easier to short now that I saw those Hindenburgs, now that we've come off the highs. I told you what I've done. I've got puts on a number of positions. I've raised cash. I'm not exactly looking forward to adding more positions, but in leadership industry groups like biotech, I might still consider. And whether we just get rotation, 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 or we actually see a big pullback remains to be seen. And that we may just get that rotation. If we look at seasonality and you want to know what, not seasonality, rather, the ratio charts, look at what healthcare has done over the last couple of weeks. Healthcare is just leading the market with technology here. In fact, those are the two strongest things we have. Even Bitcoin has sold off. If we go to my JAS layout, we know that there weren't many sectors up, only one. Staples, it was up 0.1. on the S&P 1500, but let's look at the top-down group. Let's look at all the sectors and got utilities, defensive, which is staples, and healthcare. These are the industry groups there. Do we even have 10 that are up? Let's take a look. Let's rank them. 1, 2, 3, 4, 5, 6, 7, 8, 9, and 10. 10 industry groups, top 10, the only ones up in the three leading sectors in the market on a bad day. No shocker, number one there is biotech. Why? LABU. How many of you own LABU? And if you don't, why not? How many times have we talked about it? Would I buy it here? I think the market's toppy here, and I think it's time to be careful. But if I had to go somewhere, I still like biotech. So let's just look at two-day momentum. Let's look at some things that come to the top, and I'll just go quickly. AKRO was a takeout today by Novo. Um, Takeouts are what drive biotech because the other early stage companies get all excited. Look at my friend Costco, the one I actually was short at earnings and did okay. I'm out of it now. It's a good thing because they had a massive move up over 3% on positive same store sales. I've always thought that Costco, not the products, but was overpriced as a stock, although its earnings per share growth rate, it's double digit at least. But how do you justify a PE of 55? I think you justify it by it being the number one asset in retail and home improvement anywhere. Beautiful move on Apogee Therapeutics. I don't know anything about it. Hard to be buying these if you don't know the company. APLM, another healthcare stock with a big breakout. XBio, ditto. GLTO, ditto. Big healthcare, big breakout. And then in the data center theme, one of my favorite plays is energy production. And this is Constellation Energy, a utility with a big potential big impact on the AI space and kind of a cup, a handle, and a breakout. I think CEG still looks good. One that I've played a number of times is GEV. I will tell you this is when I like to buy GEV, but I don't know when it's going to stop going sideways. GEV has had a major run. You can see it a little bit to the left of here. This was a fun time to be in GEV. My guess is we're going to get another run. Does a breakout here lead to that? It may. They've had amazing fundamentals. 161% growth, 321% growth. Again, that's change, not absolute. And you could see on the revenue that they're growing their revenue as well. So one to watch. TNFA, another pharmaceutical. VDTX. So these healthcare stocks don't look like the rest of the market, and they've been beat up for so long. And here's one we're going to come back to that if I was going to buy something tomorrow, I've been watching this thing for a number of days and thinking to myself, if it can get above that 200, I might be interested in it. And this is Spire Therapeutics. They make some monoclonal antibodies, which are to fight the immune disease of ulcerative colitis and other GI disorders. Not that I care about fundamentals, because I'm a believer that everything's in the technicals, but this company has 3 years of cash. They're running some major trials. And again, I don't know anything about GI. Ask me about oncology companies. I probably work with them and tell you I can't tell you. But no, I know a lot more about my specialty, which is oncology. But saying that, that's an interesting pattern. And that's kind of how I would look at it tonight. I think we looked at enough of them. The other thing is to come in here. One of the other ways I like to look at it and just add a couple of filters, add pullback in an uptrend, the $5 and the 200,000 above the 200, hit above, brings me down to 57 stocks, rank them by the number of My impulses are volume, gap, breakout, momentum, and CPR, which is one of my buying systems. Pepsi was up 4% today. I remember some news on it. Now I can't remember what it was. So I just go over here. Pepsi CEO talks earnings and Frito-Lay snack reset, also digital. I don't know if that was. And then poised as a turnaround as innovation productivity ramps up and their earnings came out. So there's reasons for a pop. Let's see if the earnings are out yet. 229 revenue, kind of flat revenue and earnings, small beats, but Wall Street liked it. And the triangle is also a John Person buy signal. Not my kind of stock. It pays a 3.4% dividend. ENGN, don't know this, healthcare stock, low cost. Axisome is one that I talked about in the 30s, and now it's sitting at 125. It's obviously higher risk here. It's got a lot of positive analyst comments, and they've gone from boy, I think this is a takeout candidate. That's why I was interested in to a fully functioning company with products on the market. Culligan or GC Oncology, nice stepwise breakout. I don't know if there was news today. Strong phase 3 data for its oncolytic virus therapy and bladder cancer. Well, good luck with that. Why did it rocket higher? I don't like oncolytic viruses. There haven't been a whole lot of them that have, or vaccines that have really made it in oncology yet. Verona, takeout. Here's that SYRE again. So on my top-down review, it's mostly biotech. Costco, you can buy it cheaper than it was before earnings if you believe the story, and I'll look at that. I'm not sure I want to buy it here, but I still like this SYRE. The other approach I like to do is to do a bottoms-up approach. So let me kill these. Go on. And let's just look at the impulse and clear my filters. And I've made it easy. My A+ signal. This requires my double momentum dots. Okay. So here's that CG oncology. I'm not that impressed with the story. Doesn't mean it won't turn out to be great. Double momentum, breakout, and volume. Look at strong relative strength, but a stock that's had a big move off of the 200 and starting to get extended. Not my favorite. The opposite spectrum, don't know anything about Janux Therapeutics. I know that it's had a bunch of buy signals coming in after a major sell-off. Still expect that 200 to be resistance, not my favorite. NEOG, Neogen Corporation, breakout above the 200 might make it interesting to me. Until then, it's going to fail at the 200. Speaking of not failing at the 200, Richardson Electronics might have a play in the AI data center space. Let's see. A lot here. Beating the composite estimate, 4 cents to 13. That's big growth. Sales increase for the 5th consecutive quarter. If you want to just click on the link and we'll pull up for you. We'll pull up the article and we close down the earnings because it's overlapping the article. But we'll bring the article up for you and you can read it. And then the last one is the one I like the most here is SYRE. Then the other trade is the A trade, which is my traditional A trade, which is looking for a pullback in an uptrend with some impulses coming in and typically coming out of a squeeze. So ARRY, which is a solar play. Here is the squeeze in yellow. There's a momentum and a breakout, relative strength picking up. Axisome we already looked at. You can see the sideways move, the squeeze. Delta Airlines had earnings earlier on Thursday that were well received. It's coming out of a squeeze with momentum, breakout, volume, and a gap. That looks interesting. Don't know anything about die locale. I like a gap up, sideways move to the moving average, and a bump and run. Looks like it's getting close to that. Frontier shipping, 13.7% dividend, going to have 28 cents versus 34 cents. I'm not that excited. These stocks seem to make a lot of noise and not go anywhere. INMD in mode broke above the 200 but closed right at the bottom of the session. Don't like that. Again, the Janux Therapeutics could be the greatest company in the world. I just don't know it. And it kind of looks like a bottom fish to me. Mirum is another biotech company, healthcare company. Uh, excuse me, I'm falling asleep. I'm tired. You can read through what it is in the news section. I doubt it makes money. It does not make money, although it's starting to have sales, which is interesting. I might take a look at that. Neogen, I said I want to get it above the 200. Rogers showed up over the weekend. Um, Sideways move after a run up. Looks like it's breaking out. This looks interesting as heck here. I might look into Rogers Communications as it pay a dividend. Pays $1.45, which is 3.13%. Sale technology play. Sale point too far down for me to get excited. And then here's our friend SYRE again. So I'm going to leave you. I think it's time for caution. Um, you know, you have a tale of different things. If you look at XLF, the big banks, they're still going up, but at most they're pausing. KRE, the regional banks, pausing. What do I want to look at here? Oh, is it XHB? Home builders, they teased us, breaking down. ITB, home construction, breaking down. Which one looks so much different than the rest? And that's why I like SYRE. You all have a great Friday. It's October. We get, if you look historically, some of the massive bad Mondays have been in October. I'm not saying we're going to get one, but it's October. I think the market is ready for a pause. Hopefully, it's not anything more than some sideways consolidation and rotation, but I prepared my portfolio for that. If it goes straight up, I won't go up as much because I got some protection, but I'd be very happy for the market to go up. But I think we got some more volatility in the short term. Have a great day. I will see you over the weekend. Thanks, everybody, for being here.